Choppers a throwaway. Hustle the overweight. That's why they follow me, huh? They think I know the way. Cause I took control of things. Ballin' the solo way. And if you pattern my trend, I make you my protege. Crossing that soldier race.
Hey everybody, this is Jason Matthews, your financial guru. Today, we're going to talk about what's really happening in the interest rates markets. I know right now everybody's talking about the stock market at the time as we recorded this video, which is today, February 16th, 2021. But everybody's worried about the equity markets because of GameStop or Bitcoin and all the stocks and the volatility in the stock market. And everybody sees this huge wave in the stock market and the equities market, which is the technical name. But what we're going to talk about today is the interest rates market. Now, equities is probably the most popular market they have. There's all types of markets: real estate market, grocery market, equities market, bond market. But the market that is is the biggest is actually the bond and interest rates market, because they're the ones that allow the money to get printed, then it gets eventually converted over to equities. So today, we're really going to talk about what's happening in the rising interest rate market and a couple ideas and the strategies you could use. So let's dig a little bit deeper. But before we dig deeper, hit that subscribe button. We're trying to get our subscribers up. So this is what's happening. On February 26, 2020, interest rates were at 1.3% on February 26, 2020. This is when COVID first happened. People were in frantic mode. The federal government instituted lower interest rates on them, and we started having our stimulus package with the CARES Act, so on and so forth. Because of the CARES Act, because of the Federal Reserve lower interest rates went to an all-time low on August 4th, 2020 of 0.52% for 10-year yields. We never seen it. And what people were thinking was that interest rates were actually possibly was going to go negative in this country, which we see in Japan, which we see in Europe, but we have not seen interest rates go negative. But when you include inflation, interest rates are actually negative. But that's a different conversation for a different day. But since then, we went from 0.52 to now, today as we record this, August 16, 2021, interest rates went up 1.2%. So over the course of 6 months, interest rates these are all 10-year yields, which is the biggest, popular, most influential interest rates that we should look at, which is 10-year treasury rates, which is what are the interest rates that we can get if we want to get government money, which dictates our mortgages, our savings accounts, our annuities, and all types, our bonds and everything else. It's the 10-year treasury yields. Today is at 1.2. So over the last 6 months, yields have doubled, and we don't know if interest rates are going to keep possibly going up, but it's going opposite compared to what a lot of economists thought, where they thought we was going to actually see a negative rate. And the reason why interest rates have been going up is, one, there is a lot of money out there. Number two, we're seeing that there is demand for a strong dollar, and people won't just get the money from America for such a cheap price. With all the stimulus that been happening, they're trying, hey, we want to make sure that the dollar is strong, that we need more value before we purchase it, and that's why yields been going up, right? So here's a couple of strategies that I highly recommend. Right now, even though our 10-year yields went up, the 30-year and the 15-year mortgage market does not reflect that right now. So what I recommend, point number one, is you should consider refinancing, and you should do it ASAP now. We don't know when the 30-year and the 15-year mortgage rates are going to follow the trend of the 10-year treasuries go up, but historically they always trend together. Right now, this is an anomaly. This is a crazy year. The stock market, the economy, the interest rates, everything is broken. So nothing go hand in hand like we normally would see. So with that being said, we have to be smarter and wiser and say, hey, if I have not refinanced since these low rates that we saw on August 4th happened, I should consider refinancing now before 30-year mortgages go up, and I'll be like, man, I missed the boat. Or if interest rates go up, which makes it harder and your credit lines get tighter, which I posted in another video, which you can click up above, is my 7 big predictions for 2021. Number 2 is take advantage of your free looking annuity. If you bought an annuity during this period of time as interest rates were dropping, because you was worried about the stock market, interest rates were dropping, what you should do is take advantage of your free look 10% cash surrender that you can pull out every year and put it into a new annuity that might have a higher interest rate if you're in a deferred annuity, or a higher cap if you're in a fixed index annuity, as another strategy for it. The third thing is, right now, since we still don't see the reflection in the banks and market, is I highly recommend that you switch your short-term borrowing to long-term borrowing, which means this: if you're on a credit card that's getting 20-25%, it is a great idea to refinance, get a personal loan, and have that extended and get a long personal loan for it, which might be 2, 4, 5, 7 years compared to your credit card. Right now, credit card rates are on average 20+%, even though they've been borrowing at historical low levels. So you want to refinance, get out of that 20%, and refinance and get a personal loan, which you could possibly get 2, 3, or 4%. Take it with no collateral. Take that. Now you can pay more you're paying less to service that debt and more of the principal to pay off the debt, and you can pay it off a lot faster. Now, I'm going to keep you guys up to date on what's happening economically. A lot of things are changing. We hear about GameStop and that media, that, and Dogecoin or Dogecoin or Dogcoin or whatever coin you want to hear about in the world. But we're going to keep you guys up to date with that. And in order to stay up to date is this: and hit that subscribe button. Tell us in the comments what topics and ideas you want to hear, as we want to make sure we're up to date. We want to educate the American people, because we're in times that makes no sense. And because of that, there's a great investment saying, which is pigs get fat, hogs get slaughtered. And we don't want to see none of you guys get slaughtered. We want you guys to take full advantage of what we're seeing in the market. We want you guys to be okay and your family taken care of. Remember, if you do have any questions, give us a call, 510-229-7608, or email us at matthewsfinancial@gmail.com.